Welcome to the Science Podcast YouTube channel.
Yeah.
Today we're diving into the world of high-frequency trading.
Okay.
Imagine a world where billions of dollars can vanish
Oh, what?
in minutes. Not because of some major global event,
Right.
but because computers are simply too fast
Yeah.
for humans to keep up with.
Yeah.
That's the kind of unsettling reality
Oh, no.
we're dealing with in high-frequency trading.
It is pretty wild.
We'll be exploring the origins of this controversial world,
Okay.
the major players involved, and the potential dangers
Right.
lurking beneath the surface of the financial markets.
Yeah, it's really fascinating, actually, how high-frequency trading, or HFT,
Okay.
has its roots in something seemingly completely unrelated.
Oh, really?
Casinos.
Okay.
Like back in the 1960s, mathematicians like Edward Thorpe
Okay.
and Blair Hall started developing algorithms to beat the house in blackjack.
Algorithms in casinos.
Yeah.
That's a surprising connection.
Yeah.
It seems like a far cry from the stock market.
You're right. It does seem like a different world. Yeah.
But these early pioneers were essentially doing the same thing
Oh, okay.
as modern HFT firms, using math and technology to gain an edge.
Okay.
One particularly interesting story involves a physicist named D.E. Farmer,
Okay.
who in the 1970s built a computer into his clothing to predict roulette outcomes.
A computer in his clothes to predict roulette. So is that a direct parallel to what's happening in the stock market today?
It's
Did this early drive for a technological edge ultimately pave the way
wrong.
for high-frequency trading?
It's not a direct parallel in terms of the methods used,
Okay.
but there's a definite connection in the mindset.
Okay.
Both Farmer and today's HFT developers are driven by the same idea.
Okay.
If you can process information and act faster than everyone else,
Yeah.
you can win.
Right.
In Farmer's case, it was about predicting where the roulette ball would land.
Yeah.
In the stock market, it's about exploiting tiny price differences
Okay.
that exist for mere fractions of a second. So how did this leap from casinos to Wall Street actually happen?
A key turning point was the 1987 stock market crash.
Okay.
The sheer volume of trades overwhelmed human brokers, leading to chaos and panic.
Right.
That event exposed the limitations of human-driven trading
Okay.
and created a demand for more automated, reliable systems.
So computers stepped in to bring order to the chaos.
Exactly.
Would it be accurate to say that the 1987 crash paved the way
Yeah.
for HFT as we know it?
Exactly. The crash created an environment ripe for the emergence of HFT.
Okay.
Computers could process information and execute trades far faster and more efficiently than humans.
Okay.
And once the technology was there, the race for speed began.
Let's talk about that speed.
Okay.
How does high-frequency trading actually work in practice?
Oh.
What are these algorithms doing at lightning speed?
Essentially, these algorithms are designed to scan the market,
Okay.
identify tiny price discrepancies between different exchanges, and execute trades before anyone else can capitalize on them.
Okay.
It's all about exploiting fleeting opportunities that exist for milliseconds.
You mentioned that firms are constantly trying to shave milliseconds off their trading times.
Right.
Do you have any examples of this intense pursuit of speed?
One striking example is the story of Stefan Tess,
Okay.
a businessman who focused on creating the fastest data connection between the New York and Chicago stock exchanges.
Okay.
His companies, McKay Brothers and Quincy Data, exemplify this relentless technological arms race within HFT.
An arms race is a great way to put it.
Yeah.
So as technology keeps advancing, these algorithms are constantly changing, becoming more sophisticated.
It's a constant cycle of innovation and competition.
Okay.
One trader, Haim Bodek, developed an algorithm called Size Game that took advantage of the order book system used by exchanges.
Okay.
This system essentially queues up buy and sell orders.
Right.
And Bodek's algorithm manipulated the size of his orders to gain priority in that queue.
So his size game was about getting to the front of the line, so to speak.
Exactly.
But if his algorithm was so successful, why did he stop using it?
Bodek later came to the realization that his algorithm, while profitable, was contributing to a system that was ultimately harmful to the market.
Okay.
His story highlights the complex ethical dilemmas and unintended consequences that can arise in this constant push for speed and efficiency in HFT.
So even someone who benefited from the system eventually saw the flaws in it.
Yeah.
That's fascinating.
Yeah.
Speaking of potential problems, let's talk about dark pools.
Sure.
We hear that term a lot these days.
Yeah.
How do they fit into this whole world of high-frequency trading?
Dark pools were originally created as private exchanges,
Okay.
where large institutional investors could trade large blocks of shares anonymously.
Right.
The idea was to shield them from market manipulation and prevent their trades from influencing the public market price.
Yeah.
Ironically, these platforms designed for protection ended up becoming a breeding ground for HFT.
So these dark pools designed for transparency and protection actually ended up becoming less transparent.
That's a major concern.
Wow.
Haim Bodek, the trader we discussed earlier, actually has a rather shocking anecdote about dark pools.
Oh, really?
A salesman for a platform called Direct Edge revealed to him a number of ways HFT firms were exploiting loopholes in the system to gain an unfair advantage.
Oh, okay.
This led Bodek to the disturbing realization that the system was rigged against anyone who wasn't playing the HFT game.
Wow. It sounds like the more we learn about HFT, the more complex and potentially problematic it becomes.
Yeah.
We have these incredibly complex algorithms, a relentless race for speed.
Right.
And now we're learning about potential shady practices happening within dark pools.
Right.
What are the implications of all this for the average investor?
Well,
what's the bottom line here?
The most dramatic consequence we've seen so far is the emergence of flash crashes. These are sudden, dramatic drops in the market that seem to come out of nowhere.
Yeah.
And they're often attributed to HFT algorithms gone haywire.
Flash crashes. Those are the events where we see billions of dollars wiped out.
Exactly.
In a matter of minutes, right?
Yeah.
What causes them to happen?
A prime example is the 2010 flash crash.
Okay.
Where a single large order triggered a cascade of algorithmic trading
that
caused the Dow Jones to plummet nearly 1,000 points within minutes.
Wow.
These events expose the fragility of modern markets and the potential for systemic risk that HFT brings to the table.
So we have this incredibly complex and fast-moving system that's potentially vulnerable to these kinds of catastrophic events.
Right.
How do we even begin to regulate something like this?
That is the million-dollar question.
Yeah.
Regulating high-frequency trading is incredibly challenging.
Right.
The EU has made some attempts to curb its influence, but it's a constant battle to keep up with the latest technological advancements.
Right.
And then there's the challenge of holding these powerful players accountable when things go wrong.
It sounds like a classic case of regulators playing catch-up with technology.
Yeah, it really is.
But didn't Haim Bodek, the trader who developed Size Game, try to expose some of these issues?
He did after his own company went bankrupt.
Oh, wow.
Bodek became a whistleblower, risking his reputation and career to try to make the markets fairer.
It's remarkable that he went from being part of the system to trying to fix it.
It is.
What kind of challenges did he face as a whistleblower?
He faced retaliation from within the industry.
Oh, wow.
And surprisingly, apathy from many of the victims.
Really?
Many investors seemed either unaware of the problem or too intimidated to speak out.
Okay.
It was almost as if they had resigned themselves to the idea that this is just how the game is played.
That's disheartening. So what happened to Bodek? Did he manage to go about any real change?
One of the most fascinating aspects of Bodek's story is the respect he gained for some of the HFT executives he was trying to expose.
That's surprising. Why would he respect the very people he was trying to hold accountable?
Because they understood the system's flaws better than anyone.
Okay.
They knew the risks.
Okay.
Understood the regulatory landscape.
Right.
And operated within those boundaries.
Okay.
Even if those boundaries were ethically questionable.
So they were aware of the potential dangers, but continued to operate within the system.
Yes. In a way, they were the most knowledgeable about the potential for harm.
Okay.
But they were also profiting from it.
Right.
One HFT executive even told Bodek that even if he exposed everything, nothing would change because the buy side, the large institutional investors, were too complacent to do anything about it.
So he was essentially told that even if he revealed the truth, no one would care enough to act.
Sadly, that turned out to be largely true. Bodek published his findings, but they largely went unnoticed.
Wow.
The allure of profits and the fear of falling behind seemed to outweigh concerns about fairness and stability.
That's a pretty cynical view of the financial world.
Yeah.
But it also seems to align with how things often play out.
Right.
We've covered a lot of ground here.
Yeah, we have.
From casinos to Wall Street.
Right.
From algorithms to dark pools. And from flash crashes to whistleblowers.
Exactly.
What does this all mean for the future of the financial markets?
That's the question that keeps experts like D.E. Farmer up at night.
Wait, D.E. Farmer, the same physicist who built a computer into his clothes to beat roulette?
The very same.
What?
After his casino adventure, Farmer went on to study complex systems, including financial markets.
Right.
And he believes that the relentless pursuit of speed in these markets is creating inherent instability and increasing the risk of catastrophic events.
So he's saying these flash crashes we've discussed could become even more frequent and severe.
That's a very real concern.
Wow.
As algorithms become even faster and more complex, they remain susceptible to errors and unpredictable interactions.
That's pretty alarming.
It is.
It sounds like we've created a monster that we don't fully understand and can't control.
That's a strong way to put it.
Yeah.
But there's definitely some truth to that sentiment.
So where do we go from here? Is there any way to rein in this runaway train, so to speak?
That's a question for regulators, policymakers. And frankly, all of us who participate in the financial system. Do we want a market driven by pure speed and efficiency? Or do we prioritize stability, fairness, and transparency?
Those are big questions.
They are.
And it seems like the stakes couldn't be higher, given that we're talking about the stability of global markets.
Absolutely. And as technology continues to advance, these questions are only going to become more pressing.
This has been an incredibly insightful journey through the complex world of HFT.
Yeah, it has.
But before we wrap up part 1 of our deep dive, I want to ask what all of this means for the average investor.
Sure.
Should we be worried?
It's certainly something to be aware of. And understand the forces at play in the market. This can help you make more informed decisions.
Knowledge is power, right?
It is.
The more we understand about this complex world, the better equipped we are to navigate it.
Absolutely.
We definitely need to hear more from experts on this.
I agree. There's a lot at stake here. And open, honest dialogue is essential.
So what are the key takeaways our listeners should keep in mind as we move into part 2 of this deep dive?
The most important takeaway is that the world of finance is changing at an unprecedented pace. The rise of high-frequency trading has created both opportunities and risks. It's crucial for investors to be aware of these changes and to make informed decisions based on their own individual circumstances.
I couldn't agree more. This has been a fascinating look.
It really has. Into a truly complex and often opaque world.
And
as we move forward, it's important to keep asking questions.
Definitely.
Seeking out information and engaging in critical thinking about these important issues.
For sure.
We'll be back soon with part 2 of this deep dive into the world of high-frequency trading.
Sounds good.
In the meantime, stay curious, stay informed, and stay engaged.
Absolutely.
Thanks for watching the Science Podcast.
Thanks for having me.
We'll see you next time.
Welcome back to the Science Podcast.
When we left off, we were discussing the challenges of regulating high-frequency trading. And the role of whistleblowers like Haim Bodek in exposing the potential downsides of this technology. It's fascinating how Bodek's story brings to light the ethical dilemmas surrounding HFT. He went from developing algorithms to exposing their potential for harm. What's also striking is the apathy he encountered from some investors who seem resigned to the idea that this is just the way the system works.
That sense of resignation is understandable, given the complexity of the financial markets and the perceived powerlessness of individual investors to influence them. But it's important to remember that this technology isn't just confined to Wall Street. It's rapidly expanding into other areas of finance, like currency trading, and even commodities.
So this isn't just something happening in a far-off financial world. It's potentially impacting all of us in our everyday lives.
Absolutely. As algorithms become more sophisticated and widespread, the line between the financial world and everyday life is becoming increasingly blurred. Think about how algorithms are already used to determine pricing for everything, from airline tickets to ride-sharing services. The same principles that drive HFT are being applied in more and more areas of the economy.
That's a sobering thought. So what can our listeners do to stay informed? And potentially protect themselves in this rapidly evolving landscape?
The first step is to stay curious. Read articles, watch documentaries, and listen to podcasts like this one to learn as much as you can about how these systems work. Understanding the basic principles behind HFT and algorithmic trading can empower you to make more informed decisions. Whether you're investing in the stock market or simply buying groceries.
Knowledge is power, as they say.
It is.
The more we know about the systems that shape our world, the better equipped we are to navigate them.
Exactly. And don't be afraid to ask questions. Challenge assumptions. Engage in critical thinking. The financial world can often seem opaque and intimidating, but the more we understand about the forces shaping it, the better off we'll be.
I love that question, everything.
Yeah.
It's the foundation of critical thinking and informed decision-making.
Precisely. And it's important to remember that the future of finance is not predetermined. We have a role to play in shaping how these technologies are developed and deployed. Our voices matter. We need to demand transparency, accountability, and ethical considerations in the development of these powerful financial technologies.
That's a powerful message. We have the power to shape the future we want.
We do. And now I have a final thought-provoking question for our listeners to consider.
Okay.
As these algorithms become more sophisticated, will they eventually surpass human intelligence?
Wow.
In the financial markets?
Okay.
And so what does that mean for the future of investing? And indeed for the future of our economy?
Wow, that's a big one.
Yeah.
It's like something out of science fiction.
It is.
But it's a question we need to start grappling with as we enter this brave new world of finance. This has been an incredible deep dive.
It has been.
Into the fascinating and often unsettling world of high-frequency trading.
Yeah, for sure.
Where do we go from here?
That's the challenge, isn't it? We need to have open and honest discussions about the role of technology in our lives.
Okay.
And particularly in our financial systems. We need to weigh the potential benefits against the potential risks. And make informed choices about how we want these technologies to be used. Ultimately, the future of finance is up to us.
That's a powerful note to end on. Thank you so much for joining us today on the Science Podcast.
Thanks for having me.
This has been an eye-opening exploration of a topic that often remains shrouded in mystery.
Yeah, it really has.
We hope this deep dive has empowered our listeners to learn more, ask critical questions, and engage in the ongoing conversation about the future of finance.
It's important.
Welcome back to the Science Podcast. We've been exploring the world of high-frequency trading, uncovering its origins, its inner workings, and its potential impact on markets and the economy as a whole.
It's a complex landscape that's constantly evolving. But understanding the fundamentals of HFT can help us navigate this new terrain.
In the previous parts, we discussed how HFT evolved from algorithms used to be casinos to a dominant force in the financial markets. We talked about the relentless pursuit of speed, the role of dark pools, the emergence of flash crashes, and the challenges of regulation.
We also explored the ethical dilemmas raised by HFT and the role of whistleblowers like Haim Bodek in bringing those concerns to light.
As we wrap up our deep dives, I want to bring it back to the individual investor. Given everything we've discussed, what advice would you offer to someone who's trying to make sense of this rapidly changing financial landscape?
The most important thing is to be informed and engaged. Don't be intimidated by the complexity of the markets or the jargon used by financial experts. There are plenty of resources available to help you understand the basics of investing and the forces at play in the market.
So education is key. Would you recommend that investors specifically seek out information about high-frequency trading and algorithmic trading?
Absolutely. Understanding how these technologies work can help you make more informed decisions. Whether you're actively trading stocks or investing for the long term, it can also help you understand the potential risks and benefits of different investment strategies.
Knowledge is power, as they say.
It is.
The more we understand about the systems that influence our financial lives, the better equipped we are to make sound decisions.
Exactly. And don't be afraid to challenge conventional wisdom.
The
financial industry is constantly evolving, and what worked in the past may not be relevant in today's market. Be skeptical of easy answers or get-rich-quick schemes. Do your own research and seek out diverse perspectives.
That's great advice. Be critical, be informed, and don't be afraid to ask questions.
Precisely. And remember, investing is a long game. Don't get caught up in short-term market fluctuations or the hype surrounding the latest trends. Focus on your long-term goals. Diversify your portfolio and stay the course.
That's sound advice for any investor, regardless of their level of expertise or experience.
I think so.
As we conclude this deep dive into the world of high-frequency trading, what's the one key takeaway you want our listeners to remember?
The world of finance is changing at an unprecedented pace, driven by technology and innovation.
Right.
High-frequency trading is just one example of this transformation.
Right.
While it presents both opportunities and challenges,
yeah.
Understanding these changes is essential for anyone who wants to participate in the markets and make informed financial decisions.
This has been an incredibly insightful journey through a complex and often misunderstood realm of finance.
It has.
Thank you for sharing your expertise and helping us navigate this challenging terrain.
It's been my pleasure. Remember, knowledge is power.
Yeah.
And curiosity is the key to unlocking that power.
I like that.
Stay informed, stay engaged, and keep exploring the ever-evolving world of finance.
And to our listeners, thank you for joining us on this deep dive.
Yes.
Thank you. We hope you've found this exploration of high-frequency trading to be informative and thought-provoking.
Yeah.
Remember, the future of finance is not predetermined.
Right.
We all have a role to play in shaping how these technologies are used.
Yeah.
And what kind of impact they have on our lives.
That's right.
Stay curious, stay informed, and keep asking questions.
For sure.
This is the Science Podcast, signing off.